This is your Wall Street wake-up call. Global stocks are on hold ahead of Federal Reserve Chair Janet Yellen's speech in Jackson Hole, Wyoming on Friday. For more, I'm joined now by Jochen Stanzel, Chief Market Analyst at CMC Markets, joining us now from Frankfurt, Germany. So Jochen, we've been asking everyone to chime in with their expectations on what Yellen might say tomorrow. Give us yours.
The expectations are actually that she will not take away the hopes markets have regarding lower rates for longer. That's what markets are really used to. Central banks have been promising that rates will stay low for a very long time, and markets have really swallowed that. We've got near record highs on Wall Street. If you look at the Dow Jones, it's at 18,600. Should there be a daily close above that, the uptrend could continue up to 20,000 points. So the uptrend is intact. But should Janet Yellen be in the mood of hiking rates, that should cause and could cause a lot of volatility tomorrow. So market participants should not be too complacent and should not really sidetrack the Fed.
Well, it is a wild card indeed. Now, on one hand, the Federal Reserve doesn't want to be seen as political. Of course, we have a presidential election in November, so waiting for a rate hike until after then might spark suspicion that the Fed is factoring in the political election into their policy.
That's absolutely right. Hillary Clinton and Donald Trump both said that they want to change the Fed. And there were several Fed presidents actually were very political about what they said regarding the future policy. And so that is really something that is new, that the Federal Reserve is somehow also politically engaged and politically motivating, could be that. So that is one argument they must watch and must tackle. But Janet Yellen actually proved in June this year, if you remember back to that date, that she can be very surprising. And nobody expected back in June that she would hint to have a rate hike in the second half, that she would see that as appropriate. But she did. And 1.5 weeks later, she backtracked from that. She had another opinion. So that is really a wild card, as you said.
And of course, we had that Brexit vote back in June that sort of put a wrench into the Fed's plans. We should also point out that the markets are pricing in a 28% chance of a hike in September and a higher 54% chance of a hike in December. Do you think that the Fed is leading the markets right now, ultimately using what levels stocks are at to determine their policy? And if so, is that a dangerous path?
I think what is dangerous is the complacency out there. Everybody believes that rates will stay low for a very long time. And so for short-term traders, that is a danger. But if you look at the CBO, Congressional Budget Office, about the budget deficit of the United States this year will be above 100 billion, larger than last year, because growth is just not coming back. So GDP numbers tomorrow morning will be very interesting, because they will give and provide the first glimpse into a third quarter growth after the first and second quarter was just bad. So that's data dependent, and no matter what Janet Yellen says tomorrow, I think that on the weekend we will have had a lot of volatility, but still we won't know what the future rate path will be, because it's just data dependent.
All right, Jochen Stanzel, the Chief Market Analyst at CMC Markets in Frankfurt. Jochen, thank you very much for joining us.
Pleasure.
I'm Scott Gam, and you're watching The Street.